Good evening, and welcome to AJP's closing brief. Northeast Asia sold technology today, but not equally. Korea suffered a Samsung-led sell-off. Japan split within its semiconductor trade, and China shifted toward more defensive areas. Today, Northeast Asia did not sell technology the same way. In Seoul, investors punished Samsung Electronics after its shareholder return plan failed to meet expectations for more aggressive buybacks and cancellations. In Tokyo, the semiconductor trade split in two, with Tokyo Electron and Screen Holdings rising, while Advantest fell nearly 4%. In Shanghai, the index lost less than 1% as technology weakened, and investors looked toward energy and commodity-linked names. Korea closed down more than 3%, Japan down less than 1%, and Shanghai down less than 1%. The common thread was caution toward technology. The difference was where investors could still find a trade. The flow is the story. Foreign investors sold a net around 3.7 trillion won of Korean shares, while institutions sold around 1.3 trillion and individuals bought around 3.3 trillion. The KOSPI closed at around 6,700, down more than 3%. The KOSPI 200 fell nearly 4%, while the KOSDAQ moved in the opposite direction, gaining more than 1%. Samsung Electronics was the main drag. It closed at around 257,000 won, or around $186, down nearly 9% after the company announced shareholder returns of up to 110 trillion won. Investors had expected a more aggressive buyback and cancellation program, particularly after SK Hynix announced a 40 trillion won buyback and cancellation plan. SK Hynix closed at around 1.67 million won, or around $1,210, down more than 3%. LG Energy Solution went the other way, rising more than 5% to around 362,000 won, or around $262. On the day the KOSPI lost more than 3%, the message was not that investors were abandoning every growth stock. It was that the market was becoming more selective about where the artificial intelligence windfall goes, and how companies return it to shareholders. Shanghai was the least damaged of the three. The Shanghai Composite closed at around 3,880, down less than 1%. But the index concealed a sharper rotation. Energy and commodity-linked shares held up better as technology and growth stocks came under pressure. China Shenhua Energy closed at around 47 yuan, up around 1%. Shanghai Electric Power fell around 1% to around 14 yuan, while Shandong Gold fell around 2% to around 36 yuan. The important point is what happened beneath the index. Chinese technology shares faced selling pressure while investors looked toward more traditional sectors tied to energy, metals, and other tangible assets. That made China's session different from Korea's Samsung-led sell-off. Shanghai fell only modestly, but the underlying trade was more defensive than the headline number suggests. The question now is whether that rotation can continue if pressure on technology shares persists, or whether investors return to growth once the current risk-off pressure fades. The Nikkei closed at around 65,528, down around 500 points, or less than 1%. But the index was pulled in opposite directions by the semiconductor complex. Tokyo Electron closed at around 55,150 yen, up around 2%. Screen Holdings gained around 2% to around 13,170 yen. Advantest was the major exception, falling around 4% to around 34,500 yen. That split matters. All three companies are closely tied to the global semiconductor investment cycle, but investors treated them differently today. Tokyo Electron and Screen Holdings showed continued demand for parts of the chip equipment supply chain, while Advantest became a major drag on the Nikkei. The result was not a broad rejection of artificial intelligence exposure. It was a positioning trade within the same theme. The yen also remained a focus for investors, with the dollar around 159 yen, while markets continue to watch the Bank of Japan for the next signal on interest rates. Japan therefore finished lower, but with a much less uniform technology trade than Korea. One technology trade, three answers. Korea punished the company that failed to meet shareholder expectations. Japan separated the winners from the losers inside the chip equipment chain, and China moved toward energy and commodities. The sharpest lesson came from Seoul, where Samsung fell nearly 9% despite announcing shareholder returns of up to 110 trillion won. The open question is whether investors are simply rotating before the next major artificial intelligence earnings catalyst, or whether the market is beginning to demand a different return from the companies that have benefited most from the boom. We'll be back tomorrow with the next Asian reaction to the artificial intelligence trade, corporate returns, and the policy signals moving markets across the region. Subscribe to stay with us. Thank you for watching AJP.